Hello everybody, it's Karen from Range Traders. I wanted to put together a video tonight and visit with you about my thoughts that the market has more room to the upside. And the reason I feel that way is what I see on the charts, what the charts are telling me. What you see on the screen is a weekly chart of the NASDAQ composite, and I want to take a longer view of the overall market structure and show you what I'm seeing and see if it maybe corresponds to your thinking, or I can offer some fresh insights. This is a weekly chart of the NASDAQ composite, and you can see right here that was the top in 2007, and this move down has now retraced 100%. So we're right back to where we were in 2007. That's the NASDAQ composite. Let's look at the Dow. Here's the 2007 high. Here we are down here today on this Dow weekly chart. I think there's more room to the upside because the bigger stocks will normally follow the smaller stocks. That is the ideal situation. You don't want the bigger stocks to lead. You want the smaller, more dynamic stocks to lead. So if that's true, the Dow has some room to make up here. And not only that, if I put a Fibonacci retracement on this move all the way down here to the bottom, you can see that the Dow has achieved the 78.6 Fibonacci retracement level. Now normally in a move like this, when price retraces back up, it will stop here at the 61.8 retracement level. This is kind of the line in the sand, and you can see sure enough that's exactly what happened. But now we've had this little corrective move in here and we've blown right on past it. And it's been my experience that when a market will move and blow past that 61.8 and it's up here consolidating at 78.6, it's been my experience that usually this entire move will be retraced. So we've got a ways to go here if that's going to be true this time. That's a look at the Dow chart. Let's go to the smaller chart. Look at the NASDAQ 100. 2007, there's the top. Here we are today. Haven't done much of anything here for a while, but you would think if the market was going to fall that it would have started its decline. It wouldn't be basing up here again. It usually doesn't do that. So that's a little more evidence that there may be one more leg up. Let's take another look at the Russell 2000. The 207 highs right here. Here we are today. Just kind of basing here, not doing much of anything. I'll put a Fibonacci retracement on it. We'll see where we are. Nearly 100%. So I'm thinking the smaller stocks are likely to move beyond this 100% retracement level, while the bigger, older, bluer of blue chip stocks will play catch up. Let's take a look at the S&P 500. 2007, here we are. Like the other charts, basing out here. A very similar pattern. It's basing here. You wouldn't expect that at this point. And Fibonacci retracements on this from high to low. Once again, it looks just like the Dow chart. Came up, tapped that 61.8, came down, corrected here, and now has come up. Is not quite at the 78.6 level, but it looks to me like it wants to move in tandem with the Dow, and I think there is probably one more good move to the upside. So with that being said, let's switch to a daily chart and maybe kind of see where we are. This is 2010. I'm most interested in the move from this corrective pattern here. And by corrective, I mean overlapping waves. You see how these price bars came back? They overlapped each other. That is very corrective. This move, when the price moves in one direction, and this was up, that's impulsive. Came down here, corrected with these overlapping bars, moved up again rather impulsively, came down, corrected again. And if you know anything about Elliott wave, and I'm not by any means an expert or even an intermediate student of Elliott wave, but I do pay attention. I know there are 5 waves in a trend and 2 counter moves. There will be 2 counter moves to the overall trend and 3 moves with the trend. So we could say this is maybe 1, 2, 3. Is this 4? Or is this 5? It looks to me, and from my understanding, it looks to me like this is still a corrective move, and there is apt to be a move above it, and you'll be able to tell if it's right, if this is still corrective, even though there was this little higher high over here. If this is still corrective and there's one more move to the upside, if this is a 4, then this top right here of 5.2, the high of 1370.58, that top is taken out, will mean that this corrective action has likely ended, and we maybe have one more move to the upside. And we know that that is likely because on the weekly chart we can see that we are not quite back to the 2007 tops. So it's been a very difficult market to trade because of the recent overlapping corrective action. But playing the smaller swings, if you're of a mind to, or standing aside and waiting for a better trend, that's perfectly fine too. But playing the smaller swings has been profitable, and knowing where you are in the overall price pattern, I think, is extremely important. So showing you this tonight, I hope, has given you some confidence that maybe we have this one more move up to the 2007 highs with the big blue chip stocks. The small guys have been leading the way. They've exceeded those '07 tops and may still go higher. They should go higher if the Dow and the S&P are going to play catch up. Looking at the dollar's been feeling its oats here lately. You can see that it's got this big corrective overlapping price pattern, and now the dollar has broken up a bit to the upside. That's what's killed commodities recently. I'm going to put a trend line in here connecting these major lows. You can see the dollar has a little work to do to get back up to this level on this weekly chart, but still, that is a good start, and it looks far more impressive when I show it to you on a daily chart. There is the line connecting the long-term bottoms, and you can see, if I zoom in here just a bit more for you, where the dollar has definitely broken out, broken above this trend line here. If I connect the tops, and in my way of drawing a trend line, I should start it from back here at this high and draw it down and connect the last high before the last low. And this was the last high right here, this being the last low, and price is broken above this trend line. So the dollar is showing some signs of strength. It's given commodities trouble, and I think it's entirely possible for the dollar and the cash indexes, the S&P, Dow, Russell, etc., to move in tandem for a while. So we will see as we move forward if my thinking here is going to come to fruition. But until that time, I wanted to put together just a quick video here just to give you a perspective of where we are, where we may be going. So I thank you for listening, and I will visit with you again soon.